Yo, what is up, people? I'm wearing a collared shirt and glasses. I am smarter than you and somewhat better looking than you. And I'll take my glasses off to express this point more directly. And what you need to be doing right now is taking stock of what you believe is your direction in life. Where do you think you want to be? What do you think you want to do with your life? Because the Hit the Bid family can take you on that ride. We can start your journey, hold your hand as you get started, and when you start to flourish, we'll be there to encourage you to get bigger, better, faster, and stronger. I should be a motivational speaker, right? I could load that crap onto you all day, people. But that's not what I do. But I will be doing that, and I hope you don't mock me when I start doing my emotional, psychological courses to try to train people how not to be the emotional wreck that you've seen over the last 4 or 5 years. Because what is the most important thing in trading is not learning about the stock market. First of all, you understand the difference between fundamental analysis and technical analysis, right? Maybe you don't, so I'll carefully explain that. Fundamental analysis is your typical investor. They like this company XYZ. They go read about XYZ, see what kind of industry competitors they have. You see what kind of products they have in the pipeline. How much can they sell these products for? You're doing the numbers, the earnings per share, where they project themselves to be, and then you try to crunch those numbers and figure out where you think that stock is going to be a year from now, 2 years from now, 5 years, and may I say it, 10 years? Does anybody even imagine holding a stock for 10 years at this point? Used to be that was the standard. 10-year performance they used to show. Nothing. There's no reason to look at that. That's fundamental analysis, knowing exactly what the company does. And then you've got technical analysis, ladies and gentlemen. Technical analysis is taking a gander at the charts, looking how the stock acts over extended period of times, whether it be 1 day, 5 day, 10 day, 15 day, 50 day, 100 day, 200 day, 1 year, 2 year, 5 year, 10 year. Then you look at the minimalist chart patterns, the 1 minute, the 2 minute, the 5 minute. You can continue to look at different patterns and chart activities and volume, and then we haven't even got into, as I always made fun of, the Bollinger Band, the stochastic. These are basically deep-rooted mathematical formulas based on the moving averages, where that stock has come from and where you think it's going to go depending on the volume, crossing over the stochastics and the Bollinger Band, engulfing in that envelope. Now, I could give you 500,000 books to read, okay? And the point that I'm getting to, and this is a doozy, because usually when I spew so much stuff trying to get to one point, I forget the point that I was trying to make. But the point is fundamental analysis, technical analysis, and here you are sitting here ready to pounce, whether you be ready to get into the stock for the long term, the short term, or just to try to make $100 trading it in and out. Once your money is on the line, everything that you have learned has gone out the window. That's the discipline that you need. That's the discipline that when you come and you sit down next to me and you're trying to make these decisions on the fly, I'll be there either to help or hurt you, because I'm going to hurt you. Okay, not hurt you on purpose, but I'm going to play with your emotions as we learn how to deal with them. You need to be afraid, but then you also need to learn how to control that fear. Do you understand? Because what I've witnessed is that you could have the greatest setup. You could be fundamentally sound, loving this company, and you're waiting for that stock to break 42.5. It breaks 42.5, and suddenly everything that you thought of and everything that prepared you for this moment goes out the window when suddenly the stock market starts to fall, and that stock that you just bought at 42.5 ticks to 42.51, and now it's trading at 42.25. And you've got, let's say, 1,000 shares. Next thing you know, that's almost all your buying power. Now you're down $250. What do? That's where all the emotions come flooding in. That's where everything you prepared for means nothing. It's all about the emotions and where you think you can handle this stock pulling back to. Then you look at your charts. Sometimes the chart will help you and you say, okay, if this thing pulls back to 42.15, I'm gonna have to hang on to it if it holds that price. If it breaks 42.15, I'm gonna have to sell out of it. Then it breaks 42.15 and you're so disciplined in what you do, it goes to 42.11, you're thinking, oh, okay, it's on its way down. Next thing you know, it's back to 42.25. And you're thinking, damn, I shouldn't have sold this stock at 42.15. Next thing you know, it's back to 42.50. You have lost money. The stock is now going up and out there without you. You've been faux show broed. The fake out, shake out, and breakout. There's so much more to this than just learning how to read charts. You need to learn what it looks like when a stock is being shaken out, depending on the volume. What sometimes they'll do is they'll run a stock up on pretty much no volume. Need to be paying attention to that. And it has a crescendo top and comes right back down. Generally, that top is now the top of the day because that was your V top. Also happens on the bottom, the V bottoms. They get that last schmo out and then the stock starts to run. You never want to be that schmo. And I'm going to help you. I'm going to help you prepare not to be that schmo. Because what I can provide for you, most importantly, are ideas. And that brings me to what's happening today. Options, options, options. If you're not prepared to start laying out, in theory, because when you're buying 1,000 shares of MCP, in theory, you're laying out $62,000 to try to make money in that moment. But if you're ready to buy that MCP, why not look at the options where you're risking only $500 to $1,000 to make that same amount of money if the stock moves in the direction that you were about to lay out that $62,000 cash. Now, there's positives and negatives to having margin and having the day trading account and your level 2 boxes because the access is quicker. You are the market. Whereas the option, you're paying up for that right to have that leverage. And we'll get to all that in one of my seminars on options, when the option is too expensive, where you might as well just buy the stock or you go in the money option. But these are all things that I've been spewing this stuff for so long, and sometimes I forget that you don't know what I'm talking about. And that's where, once we have the chat room going, we're going to be setting up side classes. Now, again, I've gone on to talk about this, and I've talked about this so much, and I've made decisions in my life where I thought it was going to come together before, and nothing's come together. So now, I'm going to say that eventually, I'm not giving you a date, I'm telling you what's going to happen. Even if it's just me on the radio, and every once in a while doing a video, and we have access to each other, I will set you in the right direction, whether it be me teaching a class, or one of my affiliates, that'll be that. And of course, the mentoring program is the most important part of what you can do. Sitting down next to me, I know it sounds absurd, considering all the videos that I do. Sitting down next to me, how is that going to actually help you? What I will be doing on a daily basis is coaching you as the market is open so you can feel that motion, because that's what it's all about. This ebb and flow and the highs and the lows of the emotion, and when to get out and when you think the stock is starting to peter out. A lot of times these are not things that you can find on a chart. It's all about what you're seeing on the tape. Okay, so I will be back probably in a little while. I want to see what's going on with these options. Right now, I'm looking at some options that I'm thinking about selling the puts or the calls, because right now it looks like the market's basically just going to be going sideways and selling the premium, which takes a lot of money to make any money on it. And the risk reward there, again, in theory, is tremendous. And we'll explain all about selling options in another course, because a lot of times I talk about stuff and I'm not sure if you guys understand what I'm saying, but at the same time, I'm sure there's plenty of you guys that know exactly what I'm talking about. All right, let me get to it, and I'm going to come back with you guys later. All right, good luck.
I would much prefer Crow.